Welcome to Winwood Club. For those of you who don't know me, I'm Ryan Toomey, the Director of Investor Relations for Axis Capital. And I'm joined with a couple other team members here tonight, Lucas Urvanis, who's also with Axis Capital, and Sharif Shakshir, who is with Falcon Capital Management. He is one of the co-GPs on the acquisition side of this deal, and he'll tell a little bit about himself when we get deeper in here. But I want to start just by saying thank you. Thank you all for being here. Thank you for your time. Thank you for your trust in us, especially. We definitely don't take that lightly. And what we're going to walk through here today is an opportunity that we're already inside of. And the story of what we've found, what we've done, and where this is going is why we fell in love with this deal in the first place. So currently, here's where we're at. We just closed on a multifamily property in Kerrville, Texas called Winwood Club. And we're about 2 months into that takeover process. Now, when we underwrote this deal, we absolutely loved it. We felt strong about the market, about the asset, the business plan. But there's something completely different about actually being inside the property, taking it over, walking the units, meeting the residents, and sitting down with the on-site team to start implementing that business plan. And what we found so far has only strengthened our conviction in this opportunity. So tonight, that's what we'll share with you guys. And by the end, I think you're going to see exactly why we're so excited about this one. So let me just walk you through what we're going to cover here so you know exactly what to expect. First we'll go over an entire post-close update. So we'll talk about where the property stands right now, how we're positioned in the market, and then the strategic direction we've laid out for this asset to boost its value, and then pass those returns back down to you all as investors. And then from there, we're going to be going into our execution. And I'll let Sharif dive into this in more detail. He's been heavily involved, but this is honestly probably my favorite part about tonight because this is where the real upside potential is. We're going to talk about how things are going and what's shaping in the next phase of growth. And then finally, for those who still want to invest in Winwood Club, there's $2.5 million open for investors on this deal. So whether you're someone who's never invested with us before or an existing investor who just wants to increase your position, we'll walk you through what those next steps are and then wrap things up with a Q&A at the end to make sure all your questions are answered on this call. And obviously, if there's anything after the call, just let us know. But let's take us back to the beginning for a quick second to go over the opportunity itself. Now, Winwood Club is an 81-unit apartment complex in Kerrville, Texas, built in 1985. And it has a really attractive unit mix. Studios all the way up to 2-bed and 2.5 bath units. And I want to pause on that for a second because unit sizes matter more than most people realize, especially in different economic cycles. Larger units, they'll attract more qualified tenants, they'll stay longer, and they just tend to rent a lot easier in any phase of the market, whether the economy is booming or pulling back. And that's exactly what we look for in this type of profile. And the location itself, I can't overstate this either. The location is absolutely a highlight for Winwood Club. Kerrville sits about an hour from San Antonio, and that's one of the fastest growing metros in the country. And that's a sweet spot for us. It's what we call a commuter town. It's close enough to a major economic center, but in a secondary market where pricing still makes sense and competition is thinner. And then to add to that, there's literally zero new buildings coming online, meaning there's no new competition coming into this market right now, which gives us incredible demand for an already stable property. And speaking of competition, this was a true off-market deal. And here's why that matters so much. Most of the time when we're buying a property, we're competing against other buyers, and that inevitably just drives the price up. And frankly, we have to walk away from a lot of deals because of that. But because of our relationship with the seller, someone we've worked closely with in the past, we were one of the only few who actually saw this deal. And then that relationship allowed us to lock in a purchase price of 9.15 million, which is a great cost basis. Now, here's where it gets really interesting though, and this is where it gets exciting. The previous owner didn't really do much to this property or anything at all, actually. So for us, that's actually a gift because what that means is there's an enormous amount of meat on the bone. And what I mean by that is there's significant upside that is just sitting there waiting for the right team to come in and be able to capture that. So now before diving into how we're actually going to be able to capture all that upside, I'll cover the offering really quickly. This is for accredited investors only with a minimum investment of $100,000. The preferred return will be 8%. And the availability on this is a first come, first served basis. But here's a quick snapshot of the projected return breakdown. And this diagram shows a breakdown of each $100,000 invested. So this will result in a cash flow returns of about 73,000 throughout the life of the hold, which will be about 5 to 7 years, plus equity returns of 50,000, and then your initial investment back at the end, which equals a $223,406 projected investment value over those 5 to 7 years, or 123.4% return on your investments. And those returns start accruing immediately. Hence the preferred return. And that first distribution will be planned for after year one, once the property is stabilized, we have our rents increased, and some of those units have been turned. And we're already seeing major improvements as our asset management team has already taken over the asset. And we've broken down that takeover process into 3 phases, which I will let Sharif dive into in more depth. As, like I mentioned, he's been heavily involved. So, Sharif, if you want to tell a little bit about yourself, and then also what you're seeing at the property right now, that'd be awesome.
All right. Welcome, everybody. Thank you so much for attending this webinar. So, a little bit about myself. I've been in this business since 2013. I bought about 3,300 units across 28. This is my 28th different transaction to be involved in. I have an extreme amount of experience in all things having to do with choosing the location, choosing the team, choosing the asset. And I'd say that's kind of the most important things to look at when investing as a sponsor. The location, the team, and the asset. So, as Ryan said, we closed the deal on January 30th. It took a while to get there, but I'm glad we got to where it is at that time. At the time that we took over, and again, this is part of the opportunity. With any kind of a value add deal, there's physical money that needs to be spent to improve the property. Then there's also opportunities to change out the team or both. Some of the easiest stuff to do is to change out the team. And I saw immediate upside in this deal because I don't know how to put it, but the place was not managed well. Um, Grounds were not kept up. I saw what they said were rent-ready units, and they were not rent-ready by any stretch. I brought in a full due diligence team who were professional institutional quality property management groups. And there was a lot of head shaking because they saw immediate upside that was not being realized. Property management will typically have a company and then a regional manager, and then the on-site manager. The regional manager, which is based out of like Nashville, had never visited the property. So when the cat's away, the mice will play, or the team does not do the work that they needed to do. Literally, the on-site manager felt unempowered to make decisions to improve NOI versus empowering the manager, economically motivating the manager with bonus structures that is tied to improvements and revenue and NOI. Anyway, so we took over this property in January. And one of the key things to do at that point is to comfort and stabilize and let the tenants that live there know that they're in good hands. So we don't want people leaving right away. Oh my God, new management, they're going to increase the rents or kick people out, whatever, all the stuff that are like the headline risks that, happen in this business sometimes. And instead, we're working on reaching out to the tenants, welcome them, thanking them for their tenure at the property, and then starting to outline through community events what we plan on doing with the property. Outline what we plan on doing for interior and exterior improvements. One of our favorite things that I've done in my career is to be able to take over an older, unloved property, do these interior, exterior renovations, and when the existing tenants move from unit A to unit B, which is the post-renovated unit, like that level of retention where they're showing that they appreciate the property, they appreciate the community that they live in, and they're willing to pay a little bit more for a nicer product that we're going to be delivering. That's like one of the proudest things in my career. So we've been reaching out to this people. We're actually, last time I saw, we're still 96, 97%, very, very high. Let me go back to location a little bit. As many of you know who have been investing for a bit, one of the biggest challenges over the past couple of years is how some of the bigger markets call it a DFW, a Las Vegas, a Phoenix, a Nashville, a Denver, they've been very, very flooded with lots of supply. There was cheap debt, around COVID times. So the big developers developed a lot. That supply did not match the demand. So Kerrville is basically a relatively high income community, as Ryan said, about 1 hour outside of San Antonio, and it has not been the target of all that development. I will never forget that when I came to this property, it was, like I said, undermanaged, very, very high occupancy. And then most compelling was looking at the rent comps and the sales comps in the areas. And I was seeing 97, 98, 100% occupied units or properties, and oftentimes with a waiting list. There was one deal that was recently completed, 160 some odd units, which contributed like virtually nothing to the overall supply in Kerrville. And going forward in the next 2 years, there is nothing under permitted, shovels in the ground going to be competing with us. So supply demand 101, there is not a lack of supply. There is growth in jobs, income, and population into Kerrville, so it presents an enormous amount of opportunity. Um, I'm sorry, a little bit of elaboration there, phase one, but phase two, once we take over and start to do the work, we're going to be re-tenanting. And there's a slide coming up here, but essentially the immediate proximity, like literally 5 minutes away, tons of medical jobs and a regional medical center. Those people are not the target audience right now. Literally, one of the things I go through is the rent roll, and I look at where people work. And, God bless them, but they are cashiers at the local supermarket. They are making your coffee at the Starbucks. I want to have nurses, physician's assistants, x-ray techs working at the property and short-term, like traveling medical, such as nurses. Um, anyway, so phase three, we're going to operate uh, the property, deploy capital expenses to improve the exterior, deal with some roofing issues, deal with some painting issues. A weird, weird thing I cite here in phase one about window seals. 1985 property, the rubber between the metal and the glass on a large number of the windows had simply deteriorated after the past 40 years. I brought that back to the seller. I said, not happy with this. We pretty much need to do it on all the windows throughout the property. So with that, we got a $100,000 discount, concession in our pocket to do that work. For any of you that live in hot areas, to have gaps in windows, not good insulation in the windows, um, it's not good. If you're a tenant and your electricity or HVAC bill is going through the roof because cold air is escaping, and then we come in and then improve that, like give them brand new windows, they're going to be so, so happy. It's the little things. Um, anyway, moving forward. So we're going to be spending money on the units, improving the units. Inevitably, when we improve units, then a line item for those guys who know called R&M inevitably reduces. As we spend money on CapEx, R&M expenses, go down. Meanwhile, we're going to continue to focus on maximizing revenue. Again, capturing the large loss to lease relative to comps that are in Kerrville, but 3, 5, 10 miles away. This property is basically in the center of Kerrville, and that is why it is right next to the regional medical center. This is like the best located property in Kerrville. We're also partnered with a local tax advisor that spent decades working in the local assessor's office, has a great deal of experience with the people at the assessor's office, and we have a very, very good idea of what future taxes are going to be. Um, Also, as a potential option in the pocket, as revenue and cash flow improves, DSCR improves, there's an opportunity to put on what's called a supplemental loan. Call that another, $1 million that will be able to pay back equity, which will then improve IRR. So you would basically get paid back some of your equity, yet retain your pro rata share of cash flows. So it's a huge boost of IRR.
Mhm.
Meanwhile, preparing for the exit, as Ryan said, somewhere between 5 and 7 years.
Mhm.
Okay, next slide.
Yep.
So again, the market is easily, 90 plus percent occupancy, despite the fact that we've taken over the property. Sometimes that will lead to a flight, people leaving. We're 96, 97% last time I looked at in the rent roll. That tells me that this property, this location is extremely compelling. That new owners, new management group, yet people are staying. There's a huge amount of demand, strong demand. No new construction happening in the future. Um, oh yeah, a very, very interesting thing is about how the property currently has stackable washer dryer hookups in every single unit. We don't have to retrofit it. Um, some people who are renters may have side by side the full size washer dryers. Nobody in my experience owns stackable because it's kind of a rarity. So unfortunately for the former manager, but fortunately for us, there's an opportunity to buy and rent as a premium stackable washer dryers. It is shocking to me that the former managers, owners, would basically let that revenue go off-site to another company. They would basically tell tenants, if you don't have a washer and dryer yourself, here's a company, call this number, they'll install it for you. But they are leaving a 40% ROI. I mean, if we're targeting a 20, and we can get a 40% on some portion of CapEx, it is accretive to all of our benefit. So once again, rare combination, years without material rent increases, very, very weak operational systems. We're bringing Cushman and Wakefield, very, very strong. Last I checked, they've got 167,000 units under management across the country. They have all the people, processes, and systems to maximize revenue, reduce expenses. And we're going to be addressing some of the deferred maintenance. So again, it's just going to make the look and feel of the property look so much better and worthy of the rent premiums we're going to be targeting. So operations, very, very stabilized. One of those little stories I always have to drop is that in that first day that I toured this property, again, great curb appeal. It is the main feeder road to all the medical jobs and the regional medical center down the street. Um, but again, it needed some love in terms of paint and general cleanup. I saw the one unit that was available at that time to tour. Again, walked through, didn't feel it was rent ready. I did not feel that the staff was doing a good job. And frankly, I expressed my dissatisfaction with what they deemed a rent ready unit. Um, I kind of put the manager on notice, who's no longer with us. I kind of put the manager on notice that this would not be acceptable, going forward. She proudly called me up personally, um, 2 days later and said, Shreve, you'll never believe it. That unit that you did not think was rent ready, I toured somebody right after you, and a few other people also wanted to rent that unit. And I rented that unit at above the asking rent. What I'm saying is like this property like rents itself and location, the floor plans, studios ones and twos. They have these beautiful one bedroom lofts. You walk in, you have 20 plus foot ceilings, huge windows, huge light, and an upstairs loft. Very, very unique. Go ahead, next slide.
Yep.
Um, So this is actually one of those loft units. You can see here to the left about how the ceilings go up, quite high. Behind the photographer in this unit would be 20-foot high ceilings. Again, very, very beautiful. Um, it's nice that there's many fireplaces in the units as well. It does get cold there, and these are, regular old gas fireplaces. But you start to look at the kitchens. They look nice, but they're very, very 1980s. Definitely worthy of some improvements. The boxes are very, very strong. Definitely going to be painting, putting what they call the knobs and pulls, but then also putting in brand new appliances. And if you see above the sink on the left in this bottom right picture, that overhang of cabinets, that's going to be taken out. So it's going to open up the kitchen, make it a lot more, warm and comfortable.
Mhm.
Go ahead, next slide.
Yep.
So again, kitchen cabinetry upgrades, new appliances, add the washer and dryers in the units, all the plumbing and lighting fixtures, and we're budgeting about $12,000 per unit. Um, so it's going to be night and day. Again, we're going to be wanting to command 200 to $300 higher rents. So we have to deliver the product to be worthy of those rent increases. Last but not least, and kind of a separate whole line item, and it's actually huge again on an ROI basis, is that we currently have people that walk in representing themselves as short-term traveling nurses. They're going to be there for 3 months, and they need a furnished apartment. So effectively, we're going to be doing like Airbnb style apartments where the forks, the knives, the cutlery, the sheets, the pillows, everything is there. They just gotta like walk in, move in. The best part is, due to proximity, that person who maybe lives in Seattle, New York, Florida, whatever, they don't have to come into town needing a car. They could literally live at Winwood, walk to work in one direction, and walk to the grocery store, coffee, restaurants, and so forth in the other direction. I literally was seeing people walking to work to and from this property. It was one of the coolest thing I'd ever seen. But the furnished apartments is a huge ROI generator, and we can offer those furnished apartments for $1,000 premium over the unfurnished apartment, and that'll probably still be about half the cost of living in a hotel. Extremely compelling marketing initiative. Go ahead, next slide.
Yep.
So this goes back to what I was saying about the new tenant base we're going to be targeting. I don't know, Ryan, if you can, basically in the middle of the screen,
Yep. See right
I don't know,
guy.
Ryan, if you can circle, but Winwood Club is in the middle between the green and the red boxes. So again, Hill Country Drive, coming off that 16 highway, that is the main access to Winwood Club. You got a hard corner, a beautiful monument sign, and then going towards Peterson Medical Center. So right now, again, shocking to me is that the old current tenant base is HEB, UPS, food, retail, in the area. Obviously, the incomes are not so great, versus really, really targeting the new tenant base on the left, which is all high income people who got the jobs, got the education. They're more technologically savvy. They want a nicer property. They want a nicer product. And there are many nicer, newer properties in the area, but nothing compares to Wynwood's proximity to these jobs.
Mhm.
And that's going to be the major, major target of our marketing and business plan.
Yeah, if I could actually just add to that quick, just to give perspective on how close this actually is within walking distance. It's about zero point 0.3 miles from Winwood all the way up to that Peterson on the top left. So you figure 10 minutes walking for these tenants back and forth. It's just it's a very unique opportunity. And it just creates a more stable
Mm.
tenant base again because they're higher income professionals. And I'm also amazed, Sharif, that they are not taking advantage of a demographic that's literally right down the street. But we're happy to do so, and we're happy to, give them what they need as far as furnished apartments go and things like that. So,
Yeah. So to kind of in conclusion, so we're going to be working on a direct relationship with the regional medical jobs that are again right there, targeting those medical professionals, looking at extended stay, actually, like short to medium, stay uh, professionals, in the area that provide enormous upsides. Go ahead. Um, so again, in conclusion, we're going to be renovating the property because it is classic 1980s. Kind of again, like a little story. The seller of the property bought it with the business plan to do all these renovations that we're going to be doing. They felt they didn't need to. The property, the revenue, the NOI, the occupancy was so strong without doing the renovations. They just clipped their coupons, paid their debt, and they were fine. So that leaves the opportunity for us to pick up this property and do the business plan. Again, we're going to be furnishing 10 units to the short-term medical professionals. That'll be about $4,000 or $5,000 per unit. Um, and again, the economics of our property with $1,000 premium versus a hotel is about one half that cost. Washer and dryers will be able to charge between 40, 50, $60 versus like $1,300 to buy the stackable units. Again, that equates to a 40% ROI. Very awesome. Go ahead. So no new supply. Unlike other markets, I continue to look at other markets around the country that if you pick the time and the place of the cycle of supply and absorption, there's great opportunities. But I'm still saying in the big markets, still in excess of supply. Um, and that is not happening in Kerrville. Frankly, there's clouds, like politically, geopolitically, whatever, but supply demand is the best hedge that we have against downside. A lack of supply in Kerrville is the strongest determinant about our upside. So that's why I love this property so much. Um, Despite the lack of supply, there is continuation of demand. There's multiple businesses that are growing, large businesses that are growing besides medical, in the area. So there's jobs, there's growth. Another little like fun fact that I found curious I came across is that Kerrville has the second highest per capita income in the state of Texas. What that basically means is that if you were to throw a rock, you're more likely to hit a millionaire in Kerrville than just about any other city in the state. So that's obviously not our target, right? But those people have money. They have their homes, they have their ranches, they need workers as well. And those are also some of the business owners that are building new businesses in the area that are all potential tenants for our property. I'm conservatively using 2 to 3% rent growth forecast based off looking at CoStar and Yardi. I feel like I'm a smart guy, but I don't want to profess that I have the economic capability that, I pay these services a couple $1,000s a month to hire their team of PhDs to figure out what rent growth is going to be in the future. But so we're assuming that number, and it creates an enormous amount of upside as well.
And I think it's kind of a perfect storm. We typically what we're doing in simple terms for a lot of our assets is we're targeting underperforming properties in emerging markets and then trying to capture that upside and exit within 3, 5, or 7 years. This specific market, like Sharif just mentioned, is just a home run as far as the demand play goes. And the property, even without the renovations, is still holding a 95, 96, 97% occupancy. And it's been like that for years. This wasn't something that's new. So that's just a lot of, it gives us a lot of conviction in the decision to buy this asset. And I'll break down the return summary of what that looks like and what all the things Sharif just talked about will result in by driving that upside. So the average annual cash on cash target for this deal will be 10%. The annualized return 17.8, giving you a cumulative return of 123.41% over the 5 to 7 years. And here's what that looks like on a year by year basis. Now, this is based on a $100,000 investment into Winwood Club. And I know that a lot of you on this call have already invested a lot more into this opportunity, but this can act as a benchmark to what you can kind of expect for your returns. And as we talked about earlier, this will be a 5 to 7 year hold. Now, in year one, you'll see that the cash flow number is a little lower. The reason for that is because of the things that Sharif just kind of went through, right? For the first 6, 9, 12 months, what we're going to be doing is implementing that value add plan. And then that phase, we'll bring in the washer and dryers into units, raising rents, modernizing those units to increase the income, and then to tip it all off, connecting with the HI departments at the hospitals in order to bring those tenants in once those apartments are furnished, which will significantly increase the cash flow in years 2 through 7. And then once stabilized, you'll start receiving those quarterly payouts that you'll see in years two through 7 after that first year. Now, to sum things up, with $100,000 invested, you'll receive about 73,000 in cash flow throughout the life of the hold, $50,000 in equity, plus the initial $100,000 back, which is about a $223,406 investment value or 123.4% total return. Now, for those of you who want to participate in Winwood or have already participated in Winwood, there is still opportunity to get in. As we mentioned, there is $2.5 million open for investors, and that is filled on a first come, first served basis. So this is open to those who are new investors on this call. And for those of you who already have money in this deal, there's still opportunity to increase that allocation, all of which will be tracked in your own personal investor portal. So for those of you who don't have an account yet, it's free. There'll be a QR code shortly on the next slide. You can request access and then view this and any future opportunities as well. However, this is where you can track the performance of the investment itself. So think of it like an E-Trade account for multifamily real estate. So it will show you current and future distributions, monthly financials on the property, quarterly updates. You'll receive yearly tax forms so you can get the tax benefits that these deals offer, and really everything you need to know as an investor so things are as transparent as possible and you just know what's going on with your investment at the time. So here's what you'll want to do. So step one is to review the property packet. Now, if you're on this call, you've probably already done that, but I'll have Lucas put the link to that in the chat. And also you can scan the QR code here, which will bring you right to the deal room. There's also a past webinar we did before we actually closed on the deal. So you can see how the business plan is phasing into itself. And from there, you can review it and then create your investor account. After that, in step two, you'll want to complete your subscription documents to lock in your spot. So just ask you for a commitment amount and then some e-signatures. And lastly, once completed, you'll receive the wiring instructions to fund the investment, and our team will confirm receipt. And once that's confirmed, you'll see that reflected in your investment portal. And obviously, you can reach out to us with any questions, and we'll confirm everything is all set to go and be sending out monthly and quarterly updates on the property itself. Now, to go over the investment highlights one last time, it's a $100,000 minimum investment with a preferred return of 8%, and that will result in roughly $73,000 in cash flow over the 7 years, $50,000 in equity, and your initial investment back, which is a $223,406 investment value. So I do want to say thank you all for joining us on this. This is also the QR code for that investment portal if you missed it on the last couple of slides. Thank you for your time. I'll open things up to a Q&A right now. That way everyone can get their questions answered live here. So feel free to put them in the chat. I know people have already been asking questions there. Feel free to raise your hand using the raise your hand feature, and we'll make sure that everyone has their questions answered so we can put you in a spot to make the best decision for you guys on this investment. So thank you all.
I just want to jump in and make a last little final statement. So again, I've been doing this since 2013. 28 deals I bought, 10 deals went what they call round turn. I like to say that I'm very, very strategic. I'm very, very conservative. Of those 28 deals, 10 of them went round turn, and there was never a capital call. That's typically a function of using a variable rate bridge debt, overextending. Anyway, never a capital call, never underperformance. Of those 10 deals, 17% was what I suggested to the investors they would get. The track record was 29%. so nearly a double. I'm not going to say that I'm perfect, but I'm kind of batting 100, and no capital calls, no underperformance, and nearly a double in terms of returns that were suggested to the investors. Again, I've been doing this for a long, long time. I am a not a shotgun guy when it comes to choosing markets or choosing investments. It's very, very laser focused. And I believe Kerrville and Winwood Club presents an enormous opportunity for all of us.
Love that. And yeah, I see there's a lot of questions from Ram about mostly the number side. Guys, in the investor portal, you'll actually be able to see the 7-year pro forma for the underwriting. That's included in there as well. So you'll kind of get to see how this breaks down year by year on the deal level and then how that trickles down to investors. So any questions you have numbers specific, you can definitely look there. And obviously, if there's anything further, reach out to us at our support email. But does anyone else have any questions at all right now on this call that we can help answer before we log off?
Hey Ryan, this is Ram again. I have one more question, if that is
Sure.
okay.
Sure.
So, where are you with this deal right now? In the sense, like you've already taken possession, or you already started looking at the changes that need to be done?
Yeah, I mean, so I'll take that. So again, we closed January 30th. And I would almost say that what we're stepping into right now in terms of completing the capital raise couldn't have happened better. Frankly, if we had this $2.5 million already raised, that is literally a financial liability of the property. We'd have to pay an 8% pref because that accrues upon investment. We'd have to pay that, and we don't. So we've reduced the expenses by raising it when we need it. So we uh, let the old management team go. We changed the management company. The management company, by the way, the management company already already manages for another property in Kerrville. So they've already got staff, they've already got GCs on their payroll. So that's enormously, good for us. So we brought in, new staff. We are now going back out to, actually, it's already begun about a month ago. We've gone back out to the GCs. They were planning on dealing with some of the deferred and some of the value add opportunities, so they're refreshing some of those bids. So we're deep in the work of improving this property right now.
Mhm.
I see. And currently, month over month, right? Like, are you in the positive side, or is it still like not fully there yet?
I'm sorry, positive month over
Positive
month.
meaning like you have profits that you're sharing already?
It would definitely positive NOI and easily, paying the debt. Ryan, conservatively said, that we should plan on holding off a little while before making any preferred distributions. Um, we'll leave it out there, but looking at the numbers that I have, it's more likely than not we'll probably be paying far earlier than uh, later.
Okay, thanks.
Yep. Yeah, that's typically about 6 to 9, maybe 12 months after takeover. And that's because we're going heavy on the things that Sharif mentioned as far as CapEx items. And we obviously don't want to have a small reserve budget if we're going and doing all these changes, right? So it's more so to protect investor capital first. That's all obviously stage one, and then two would be to send out distributions. But yes, that's kind of how where we're currently at with this. It's only been a couple of months as well, so it's not very common to have distributions go out that quickly. Drew, did I see your hand up? It came down again, but do you have a question?
No, I got answered, so I
Okay,
lowered my
perfect.
hand. Yeah, thank you.
Perfect. Yeah, of course. Right. Anybody else? Oh, Byron?
Yeah, this is pretty astounding. I like the deal, but it's going to be a silly question of me. If I have contacts who have capital, could I bring them into the deal?
Welcome.
Yeah, because after seeing this, I mean, I would like to see if and make it available to them as well. Um,
Absolutely.
they're funny. They used to be my former bosses, so it's kind of funny how life balances out. So, you know, but they're good guys.
Yeah, I would say, Byron, what we can do is I'll have either myself or Lucas reach out to you tonight or tomorrow morning, and we can just have a discussion offline there and just see if there may be some good fits. But definitely, yeah, we definitely will entertain the conversation.
Okay, fantastic. All right, thank you. Again, sorry it was a silly question, but I just had to ask.
No, very good question. Very good question.
All
Ray,
right.
I see. So you're asking who do we typically sell to is pretty much what you're asking. Multifamily is a relatively small world. But I mean, I'm not sure if Sharif, you've had consistently used the same buyers and stuff that you sold before. But it tends to be more, offer based. It's not like we're targeting specific people from the very beginning to sell to at the end. Granted, it's most likely going to be groups just like this.
Now, the natural buyer for a property like this is going to be an institutional buyer that already has a strong presence in San Antonio, again, like 1 hour away. The other natural buyer, which could be the same or different, is somebody who already owns properties in Kerrville. And there's a good number of units in there. There's a diversity of institutional and like private capital that owns in Kerrville. So it makes enormous amounts of economic sense that if you already own there to add units such as this property, especially because of its location. It is so compelling. I mean, if any of you guys are near Kerrville, you should come out and see it. You'll see an enormous amount of opportunity.
Pam?
Hello, Pam.
Hey, quick question. Do you guys, and maybe I missed it somewhere, offer an opportunity when you are out there at the place for investors to come out at some point?
Um, I'm working on some other deals in El Paso right now. And next Sunday, I'm going to be meeting and greeting about 20 investors just like yourself. I'm going to be footing a very, very
Nice.
expensive dinner tab. Then I've got a like Mercedes, 15-person Sprinter van because I'm going to be taking
Nice.
them out to drive the one asset that I've already owned and the five other assets that I'm under contract to buy.
Nice.
Um, so yes, I think it is a good idea. Perhaps me, Ryan, Lucas should talk about this, but I would be absolutely loving to host you guys. A group to tour around the area, the property, the comps, the job story, walk and see the medical center. It is extremely compelling.
Yep.
And
Count
by
me
the way,
in.
like Kerrville is just it is kind of known to be a vacation destination as well. Why? Because just the topography, the hill is called the hill country of Texas. The hills, the river, the camping, the hunting, people go out there. So it's a very, very desirable, area. It's gorgeous, really. And Kerrville itself is just a cute town.
Nice. Well, count me in if the date works.
All right. Love to host you guys. If that's something that would, we get some momentum, Ryan, I will absolutely
Yeah.
drive that Sprinter van, take people around.
Yeah, Pam, I was also going to say like, that's very typical. Obviously, it takes a little bit of planning ahead of time because some
Yeah.
people aren't located there. But that's a very common thing. You guys are also don't forget you're part owners in this deal as well, right? So you are have all the reason to go see the property if you'd like to. Obviously, we would like to tour it with you, but that's again just take some planning. That's not a problem at all.
Cool.
And then Ray, so do we leave meat on the bone for the next buyer? That is pretty typical with the types of properties, mainly because obviously we don't want to max it out and then give them no room to do whatever their business plan is. Granted, at that point, there's probably going to be extra layers of rent increases they can do. This is 5, 7 years down the road. There's a lot of things they may be able to add, but that's typically how we'll operate. Is they'll leave a little bit there just to kind of intrigue them to obviously want to buy the asset and do whatever they need to do for the property. Thankfully, in this
The,
case, there was not much done at all. So
yeah, the math there, to be specific, is we're planning on doing 80% of the units right now for that interior renovation at $12,000 a unit. And we're planning on doing 10 furnished apartments, the studios and the ones. So if that, works out well, somebody may want to complete those items in the future. And looking at a hold is probably, 5 to 7 years.
Mhm. All right. Well, I know we got about 15 minutes till we get to the top of the hour. Does anyone have any questions left at all that we can answer live on this call for you?
Did just want to like highlight one thing, and Lucas was making that point a little bit earlier. And I've been doing this a lot, seen lots and lots of units, 3,300 that I bought. Historically, my data supports that I look at about 100 deals to buy one. I've seen a lot. For 1985, 81 units, the central pool courtyard, two level with the little gazebo for the barbecues is unheard of for a property of this vintage and this few units. It's gorgeous. And just one of the things I do, but I will go to, a local restaurant, a bar, and talk to people. And invariably, I end up talking to people who used to live there, wanted to live there, had friends that lived there, boyfriend, girlfriend, whatever, used to live there and regret moving, whatever. But everybody that I happen to talk to in town loved this property because it did not feel like such a, old property with the amenities that it had. That they love the property and love the location, love the swimming pool. They love it. Yeah, it also had like some huge balconies as well. It's nice. Anything else?
All right.
Would it be
Well,
worthwhile, Ryan, like drop in my contact info in case somebody wants to offline do some Q&A?
yeah, so actually, what I was going to do, this is perfect segue. I can kind of wrap things up. I'll be sending out the recording for everyone that did register for this. A lot of people couldn't make it live because obviously it's late on the East Coast. People have different commitments. So you guys will all get the recording. In there, I'll include Sharif's info as well as our info at Axis. Reach out to anyone. We're all partnering on this deal, obviously, and we can answer different questions and help you guys out. And for those next steps, I'll also enter the investor portal. Just a link in there as well for those of you that want to create your accounts and go look through the deal. But yeah, everything will be sent out first thing tomorrow. And in the meantime, if you guys have any questions at all, just reply to that email, reach out to one of our contacts, and we'll get you through whatever you need as far as questions and the processes go.
And feel free to circulate the webinar with all of your accredited friends and family
Mhm.
or former bosses, whoever it was. Who said that? But it's still.
All right, perfect. Well, I'll give you guys the last 12 minutes or so back. Have a great rest of the night. I appreciate you all joining us live, and we'll talk to most of you guys soon.
Thank you.